Are you ready to discover whether Canadian Tire still lives up to its reputation as a blue chip investment choice? We're diving deep to see if their history of delivering both growth and dividends holds up in today's market. Join us as we put Canadian Tire to the test. One of the first things I think of when I think of Canadian Tire is, well, the Canadian Tire money. I remember as a child collecting all those bills and feeling like I was rich as they piled up into some impressive looking stacks of almost cash. In many ways, I think Canadian Tire money was Canada's second currency. Some stores even accepted it as that 25-cent bill was good for 25 cents at Canadian Tire. And, well, everybody pretty much shopped there. Canadian Tire has been, without a doubt, a Canadian staple. If you wanted something for your car, Canadian Tire. If you wanted a new volleyball, Canadian Tire. Or if you wanted one of those mosquito torches in the summer, once again, Canadian Tire. It is undeniable that this retail giant has become a part of the Canadian experience, and that is probably why it has always been a great investment in the past. Speaking of the past, Canadian Tire began back in 1922 in Toronto as, well, yes, a tire store. Over time, the company grew and expanded its product offerings, eventually becoming one of the largest and most recognizable retail brands in Canada. Today, they operate more than 500 stores right across Canada, coast to coast, and they continue to sell reliable products with competitive prices and, of course, Canadian Tire money, which is now on a card. I do kind of miss those bills, though. Join the conversation. Let us know in the comments your favorite Canadian Tire memory. Your participation is always well appreciated. Don't forget to like and subscribe to stay up to date on future content, and thank you for that click. This is a deep dive I am really looking forward to. I have held Canadian Tire in the past, and honestly, I've always made a profit. It kind of makes me wonder why they are not in my portfolio right now. After this deep dive, if the math proves them to be awesome, I will have to rectify that. Without any further ado, let's see what Mr. Math has for us today. Of course, we're going to start with the surface data. We always start with the surface data, so let's look at their market cap. It comes in at $9.96 billion. Then they have a beta of 1.25, so they're pretty not super volatile. Their earnings per share comes in at 16.89. Dilution is not a major factor. Doesn't say there isn't any dilution, but it's really nothing we need to worry about with Canadian Tire. Their price to earnings ratio, it comes in at 9.63. Now, an average among other similar stores is around 24.5. So they're definitely looking like they have more room to grow than some of these other stores. Their price to book ratio, that comes in at 1.70. Now, when we take a look at their cash flow, they've got a revenue of $17.70 billion, and their earnings come in at $987 million. Now, those earnings are actually projected to grow by 2.55% per year, which is always a good thing. Now, if there is a dark spot on their cash flow, that's the free cash flow, which is in the negative. It's negative $125.33 million. I'm not a huge fan of a negative cash flow, but let's see if they have the depth to take care of that. Their return on equity is 17.53%. That is really a good number to see, especially after that negative cash flow. Now, what about their fair value? How much should those stocks be worth? Well, their fair value comes in at $247.68. That means they are 33.9% undervalued. That definitely comes in line with that PE ratio. So far with the surface data, it's not too bad other than that negative free cash flow. Let's take a look at and see what their returns have to show for us. When it comes to dividends, they have a dividend yield of 4.24%, which is paid out quarterly in the amount of $1.72.50 per share. Their payout ratio, that comes in at 31.97%, which is pretty awesome. But here's the best part. They have increased their dividends for the last 11 years. That makes them, well, you know, a dividend aristocrat. And I do love those dividend aristocrats. Okay, let's take a look and see how much money we're making on the growth side. When we look at their 3-year return, they began at $148.60 and they closed out the 3-year at $162.74. That works out to a return of investment of 9.52%. Now, when we factor in all of those dividends over those 3 years, you get a total return of 20.07%. That's not too shabby. Moving on to 2022. In 2022, they began the year at $183.73, but they did fall to $141.50. That works out to a return of investment of negative 22.98%. Work in the dividends, and we get a total return of negative 19.80%. That's actually not that bad. The TSX did fall 17% in the bear market, so there they're a tiny bit worse, but I would still say they're definitely within a good standard deviation of the overall market trend in that bear market. So this does not worry me too much. Let's look at 2023. Okay, so let's look at 2023. They entered with $141.50, and at the time of recording, they were coming in at $162.74. That is a return of investment of 15.01%. Now, they did receive one dividend, so that bumps their total return up to 16.23%. They have done well in 2023. These returns are pretty solid, and as I said, their 2022 return is not far off from the overall market's drop. Their 2023 numbers absolutely off to a great start, and let's hope they can keep that up. Of course, before we can rule on the fundamentals, we need to wade into their debt. They have a total debt of $8.194 billion, and their total equity comes in at $6.827 billion. That gives us a debt to equity ratio of 120%. They do have cash and equivalents that do add up to $489.80 million, so that's not too bad. When we look at the short term, their short-term assets come in at $11.80 billion, while their short-term liabilities come in at $7.02 billion. That's pretty good. We switch over to long-term. Their long-term assets come in at $10.42 billion, and their long-term liabilities, they come in at $8.36 billion. That's not too bad. I think overall, I do kind of like their debt situation. Yes, I would like their debt equity ratio to be a little bit lower, but yet it is not as bad as debt is simply a part of the game with a lot of retail companies of this nature. I do absolutely love that their short-term assets can cover their long-term liabilities. That is a huge plus in my books. There is one issue I don't like with the debt situation. That is that their debt is not well covered by their operating cash flow. Is this a deal breaker? No, it isn't. It is just too bad they couldn't use some of that Canadian Tire money to pay down that debt. So what is the final verdict? Canadian Tire is a blue chip total return stock that has not changed. I am certainly not crazy about their negative free cash flow, but they do have enough cash and equivalents to cover it if they need to. Their current debt is a little on the high side, and that debt to equity ratio has been increasing, so that is a little bit of a concern. With their earnings forecast to grow a bit year over year, that is good news, and hopefully that will help them lower their debt a bit. Canadian Tire still has reputation working for them, and I see them still as a very solid business with no real big concerns. If a recession were to come along, yes, they would have some struggles, but they do have the depth to persevere. So far in 2023, they are tearing it up, and if that recession does not arrive, maybe they just may be that stock we all wish we held from the beginning of the year. This one is tricky, but for now, I do think there is some short-term potential and definitely lots of long-term potential. Canadian Tire has passed the muster on this deep dive, and I think I still like this stock as much as I did coming into this deep dive. As always, be sure to do your own due diligence before you even consider jumping in on any stock you hear about on YouTube. Keep the learning going, watch my video on REITs linked on the left, or test YouTube's recommendation skills by checking out the video on the right. Your choice will decide the winner. See you in the next video.